Welcome to Renewable Energy Investments. So everyone has an opinion about SPACs. Some people hype certain SPACs like they are the next foolproof get-rich-quick scheme. Others seem to think that all SPACs are fool's gold and proclaim retail are doomed to be the bag holders. I've been following SPACs closely for the past year and a half, as many renewable and clean energy companies that this channel covers have gone public through SPACs. I've bought, sold, and made many videos covering numerous SPACs. In this video, I wanted to share the insights I've learned about investing in SPACs, and towards the end of the video, I'll share 3 different strategies that I use when buying SPACs. Insight number 1. Be skeptical of all SPAC YouTube videos. Here's a dirty little secret. Many SPAC YouTube videos are just grabs by YouTubers to get some views. Some of these YouTubers may not actually believe in the underlying company. This is because SPAC YouTube videos are incredibly easy and quick to make, and even a new YouTuber with no existing subscriber base can get a high number of views. Just grab the investor presentation deck and add a bit of commentary, and voila, you've got yourself a decent little YouTube video. And the best part is, because SPACs are new stocks, there's generally little to no competition in the YouTube search algorithm results, meaning any new YouTuber can get a lot of views if they are one of the quickest to post a video, regardless of how good the content is. So if you watch a SPAC YouTube video, in the back of your head just ask yourself, is this YouTuber making a video about a company they believe in? Or are they just blowing hot air while fishing for views? While there are certainly a number of stock YouTubers that I respect, there are a whole lot of them that are rather questionable. On the other hand, I have to admit that with SPAC investing, speed can be the name of the game, especially with what I'm going to call hype stocks. So a quick video posted on a new SPAC isn't necessarily done with less than pure intentions. For instance, I was aware of the CCIV Lucid merger when CCIV was still trading at $12 per share. I could have pumped out a video, and by the end of the day, anyone who watched it that day could have gotten in at under $20, then rode the hype wave all the way up to the $60 range. So a speedy YouTube post before a SPAC gets hyped by the rest of the world can certainly have some value. Anyone who wants to grab some shares of a hype stock at a reasonable valuation needs to act very fast. This is the reason why I posted very fast videos for QuantumScape, STEM Inc., and Hyliion. But again, this may be the exception and not the general rule, and a large number of SPAC YouTube videos may just be empty view grabs. Insight number 2. 2021 SPAC returns are probably not going to be anywhere near as good as 2019 SPAC returns. I'd like to call attention to one of Wall Street's classic tricks. Give retail investors a good deal on a few IPOs to whet their appetite. Then, once they're hooked, feed them a bunch of overvalued IPOs and make a boatload of money. Or, maybe it's no trick at all, but simply supply and demand. Given the success of many SPACs in 2019 and 2020, everyone and their mom now wants to do their own SPAC, including Shaquille O'Neal and Alex Rodriguez. Now, we have hundreds of SPACs courting a finite number of quality targets, resulting in far less quality companies for each SPAC to choose from. Plus, targets may be able to make SPAC sponsors compete against one another, and in doing so, may be able to negotiate much higher valuations. Either way, I don't think we will see the same ratio of good SPACs in 2021 that we saw in 2019 and 2020. Insight number 3. Although lots of SPACs will end up failing, there will be a number of gems, true diamonds in the rough. Investing in SPACs is not unlike investing in startups. Even though many SPACs are likely to fail, the massive upside that can be had from picking a winner can offset the losses from multiple duds. This is because if you pick the right SPAC, you will be getting in very early on a high growth company. The trick is having a high enough hit rate so that the gains from the winners outweigh the losses from the garbage. Because SPACs are inherently very risky, it is a good idea to limit exposure to them. Personally, SPACs always comprise far less than 5% of my overall portfolio. Okay, so with that said, how can one try to sort out quality SPACs from the bad ones? First of all, I pay attention to lockup periods relative to production timelines and events. If the early investor lockup period ends before the company's product will be produced and sold, you should probably ask yourself why. This can be a big red flag. Are early investors looking to dump their investments on retail bag holders before anyone outside of the company can actually verify the company's products? This question can be hard to answer, so a dose of healthy skepticism, your gut instinct, and as much due diligence as possible are all warranted. Another red flag is if the company puts on an event or presentation that hypes the company just prior to the lockup period ending. A prime example of this was Nikola Day, a blatant attempt to pump the stock just before the lockup period expires tells me not to go anywhere near that stock. I also pay close attention to valuations. No matter what you hear to the contrary, valuations always matter when it comes to any investment, including SPACs. Make sure you are aware of the full post-merger valuation and don't get tricked by the valuation of the pre-merger SPAC. For instance, if you look up the shell company's ticker on Yahoo Finance before the SPAC merger occurs, the listed market cap only reflects the shell company's equity. It does not also include the existing shareholders' equity that will roll into the new company. So you may have to run some numbers to come up with the true implied market cap of the entire post-merger company. Come up with a valuation you are willing to pay and stick to it. If I can't get in below that valuation, I'll just let that SPAC go, or hope for a pullback before I buy in. If I get in and the price skyrockets past my target valuation, I'll consider selling some of my position to lock in some profits. Many SPACs behave similar to pump and dump schemes, and you don't want to be the one left holding the bag. Okay, so now here are 3 different strategies for investing or trading SPACs. So there are 2 pre-merger timeframes which one can invest in SPACs, and each one comes with a different strategy. The first option is buying the SPAC before it has announced what the target company will be. Investing at this time is essentially straight gambling on the sponsor. The strategy is to find a good sponsor, get in early, ideally around the $10 per share price, then hope your sponsor ends up selecting a great company. If you don't like the company, you can generally opt out of the SPAC by redeeming your common shares for $10 per share and or voting against the merger. For me, I've been riding with Chamath Palihapitiya and Bill Ackman. Chamath has a track record of well-performing SPACs, like Virgin Galactic, Open Door, and SoFi, along with a depth of technology expertise and even a brand name and a cult-like social media following. All of this means that Chamath can actually add value to the companies that SPAC through him due to his technology and business expertise, as well as the exposure and free marketing a company gets by being associated with Chamath's brand. Bill Ackman is another investor with a solid track record, although he has yet to show he can make it work with SPACs. Bill is another jockey that might be worth betting on due to his business expertise and impressive following. Another thing to look for would be a SPAC with investor-friendly terms, such as Bill Ackman's PSTH SPAC, where the sponsor's management fees are way less than other SPACs, and the SPAC itself is set up to have less warrants, meaning there will be less future dilution to shareholders if and when the company successfully merges. The second option is investing in pre-merger SPACs after they have announced what the target company is that they will merge with. Investing at this point in the SPAC timeline is still very speculative, but is not straight gambling. I have two separated strategies for post-announcement SPACs, a trading strategy that I use for hype stocks, and a more of an investing strategy that I use for non-hype stocks. Trading a hype stock. Here, the strategy is to get in as soon as possible following the announcement of the merger target, or after the first pullback thereafter. Then, I wait for the full hype train to get rolling and the stock to get overpumped, at which point I take some profits. This strategy would have led to massive gains in the most popular SPAC names such as Lucid, Nikola, Hyliion, QuantumScape, STEM Inc., etc. Again, I make sure to cash some profits if and when the SPAC pops, as these hype stocks almost always pull back to a more reasonable price once peak hype wears off. Investing in a non-hype stock. Sound long-term investments also exist in SPACs. Here, the strategy is a bit different. Often, these are not the hype stocks, so they do not pop immediately upon the merger announcement. So there is less of a need to rush into them. Instead, one can patiently wait for the right price to enter. If the business fundamentals make sense, and I am confident in the long-term trajectory of the business, then I buy and hold these SPACs just like any other long-term investment. For instance, one I got in was MP Materials stock. It traded between $10 and $14 for 4 months after the announcement. It never turned into a meme stock, so I had plenty of time to buy in pretty heavy with a long-term investment thesis. Even though it eventually rose to $45, I have no intention of selling any of my MP stock unless my long-term bull thesis changes, as even at these levels, I like it as a long-term investment. I hope you enjoyed the video and maybe even learned something. If so, please consider hitting the thumbs up button to support the channel. I'd love to hear what your favorite SPAC investing strategy is and what your favorite SPACs are in that comment section below. This video was a bit different, as videos on this channel usually cover individual renewable energy related stocks. For more content, I invite you to subscribe to the channel. Thanks for watching and have a fantastic day.